Okay. How's everyone doing? Let's just move that camera up a little bit. That's a little bit better. Sorry I'm running a little late. I was going back through the Fed statement looking for some edge, and unfortunately I didn't get much out of it other than what I'm about to discuss, although there was some good stuff. So everybody, while we're waiting for a few more people to get in, I will take some notes on what people want to discuss and kind of weave it into the discussion. So just give some tickers and I'll run through it as best I can. We probably won't get into everything, but we'll get into a good amount. Sorry about that. I had a phone call that I actually needed to take, but they will have to wait for a moment. Okay. Some of this stuff I was planning on covering. I'm glad that people are asking about it, though. Alright, so let's, oh God. Alright, so I think we have some good stuff here. So, bets off at the moment. For those of you who are looking for Easter eggs in my videos on Fed days, I have multiple shirts of these, but on the Fed days I actually wear the ones that say Blue Lives Matter, and on the days that they don't, I just wear the regular one. How's that for a little JP trivia? Anyhow, there's a heck of a lot of stuff to cover. Let's just get the Fed out of the way. It's what I'll tell you this, despite the conversation of the election being what the market is focused on, I believe it is more about this, the Fed. So I took some notes. They're a lot shorter than the last few because all I have to go on is the statement. We don't have the minutes yet. I'm curious to read the minutes when they are available. I'm not sure the date that they're available, but when they are, I will analyze them thoroughly. So we all know there was no Fed hike today. They didn't raise interest rates. They said that the case continued to strengthen for the rate hike, which I guess you could take as hawkish. They said that there was one less dissent. Rosengren didn't dissent. Of course, Mean Red and both Loretta Mester and Esther George were out there being the dissenters again. They talk about inflation increasing but below the target. In past minutes, they've discussed their inflation, talking about looking for 2%, and they're really not there. I mean, the only thing that I see being inflationary is the exploding Obamacare and so on and so forth. I know they've discussed energy, but that seems to be coming in a little bit here. And it seems clear to people that there's not going to be an OPEC cut in November the 30th. But we'll have to see how that's going to play out. I had been under the impression that we were going to have stronger oil into like a squeeze into it, but it seems like we may get a bit of a sell-off. There was a very large inventory number in the distillates today, and it seems to me that it's unclear why there was such a large build. I had someone float it that there might have been overstocking for the hurricane, which would make a lot of sense actually, but nonetheless, that still needs to be worked off. They said that jobs, they keep using this word solid for jobs. Yeah, they're not so solid. I am not seeing a lot of wage pressure. I'm not seeing what we would really need to see for there to be this kind of quote-unquote hot economy that Janet Yellen's. I mean, I don't know what economy or what data they're looking at. I'm still looking for that data. They must be getting their data from where Jack got his magical beanstalk beans, because the data that's coming in is not very hot. There are blips up and blips down here and there with ISMs and PMIs and durables, but I've proposed before that we're just in a bit of a refresh cycle and we're in a bigger structural downturn. I know that the media keeps hyping up the idea that negative rates are to blame, ZERP, but I'm going to propose to you that negative rates have been the only thing that's kind of been the scotch tape that are keeping the wheels on the wagon here. If they start raising interest rates, that's going to be a bit of a problem, particularly for the stock market, and I think that's why you've been seeing the market coming in, because remember what I've talked about, PE multiple premiums are dependent on either growth, which we really aren't getting much of, or a lower than normal interest rate. And if the Fed is going to start normalizing, that PE multiple premium needs to contract. It needs to come in a bit. So that's what's going on here. They talk about a modest economy. So if you don't have target inflation, and we've been running below the Fed target for a while, you know, they've in past meetings have mentioned, Janet Yellen talked about symmetry a few Fed meetings ago. This is what I commonly refer to as her come to Jesus moment. And now they've been talking about a run-hot economy, which is sort of just the updated version of that, meaning that they haven't reached the target and they're willing to let inflation spill over a little bit to make up for the time that it's been below. It's not like we tag 2% and then it's, you know, it's over. They talk about a modest economy that's being generous. Household spending, they said, was a bit down, and then they talked about business investment being down. And I've proposed for a while that that's the case because of regulations and Obamacare, among other things. Lack of visibility, there's obviously some political risk here as well. So it seems to me that if you took the Fed's statement as is, based on I guess, at face value, that this was basically the status quo, more hopefulness, and that they would not be hiking in December. However, the Fed lives in an ivory tower, and they think they have like a reputation to defend for some reason. I'll propose to you that if they hit the rate hike bell and the market collapses, that's going to do more to damage their reputation than pissing off a few short sellers and some pundits who seem to be wanting to stoke the embers of fear here. They should be remaining pat. What they will do and what they won't do are, are a different scenario. I've proposed for a while that there is risk in the December meeting. The probability of a December rate hike actually came in a bit by the close today. It's about 66.8%. I'm curious to see how that goes into the actual meeting. There seems to be a lot of fear about, I want to just dispel a couple of things first and foremost. I think that the market would not react as adversely to a Trump win as the TV pundits have proposed. Just so you know, a lot of those people were called out in WikiLeaks that they've been involved as basically Clinton campaign operatives. So I really don't listen to what they have to say. I'll say this, that I think that a Trump win would not be as devastating to the markets. Maybe it would be like a Brexit thing. Maybe there's a knee-jerk down and then a move back up. But I actually believe that if the market is down into the election, like if we continue down, we've been down multiple days now, that there could be a bit of a relief rally no matter who wins into the kind of like a... it's sort of like a sell the news type of an event. This would be kind of cover the news, short cover the news, cover the news or whatever. So I think really no matter who wins, there's probably going to be a bit of a relief rally, and that actually is lining up very nicely with some of the technicals that I'm going to go into. Just so you know, I've been more cautious and I guess a little bit more bearish in my last couple of weeks' weekend reviews, and we're now first starting to achieve some of my downside targets. So as we come into those targets, I have to be a little less bearish. I can't be, say that things are as bad as they were, but I will say this. I have an overall, I always say you have to be able to read the tape and have a feel for the market. And the market overall is not reacting well to stimuli that should be positive. Case in point, Facebook after hours. They delivered a pretty great quarter. It was a beat on both the top and bottom lines. Alibaba had a pretty good earnings report. They were up in the morning, and then they basically gave it up. I had cited that it needed to hold 103, 104, and if it didn't, it was going to go lower. I hope people were able to either book profits on that or catch the short more than likely. Google had reported good earnings. They actually were going higher. And then the news kind of hit about the FBI investigation, and I think that kind of triggered algorithmic selling. The point being is that stocks that are doing well, reporting good earnings, are going down on the earnings. So it's sort of like you report a good quarter, you get hit, but if you report a bad quarter, you get like absolutely slammed. It's sort of like tapping on the brakes, banging your head versus going through the windshield in case like a Fitbit, for example. I'll get into Fitbit in a little bit. That was one that I had covered. Anyway, let's get into some of the technicals with the market here. Fitbit, by the way, is an interesting case. Going into the end of the day, I was actually short some puts. I'll start with Fitbit because it's just this is what I often talk about experience. I had been short some puts and I was planning on holding basically them short through the print. However, I looked through at the short interest. I saw the big 44 or 45% short interest, and that was encouraging to me as well. However, the technical pattern of the stock looked iffy to me. Now, in my youth, I was actually slightly down on the position. I think I was down like maybe 40 cents on the short put. It wasn't like a very big dollar amount. I only had a handful of them short anyway. But I said to myself, back in the day, I would have said, I'm only down a little bit. It's a pretty juicy premium. I'll probably be okay. And me and my experience state here said to myself, do you really want to be defending this thing? If it gaps down, it's going to be at an all-time low. There's tons of shorts in there. It's going to flush, and the stock there is no, it's unprecedented, the technicals. I said if the stock does wind up gapping up on the earnings, there's such a big short interest that it'll probably continue. So it could be something that you like buy over the first 1 or 5 minute high. So I decided to take the puts off, and I'm all the more happy for it. They were actually short 14 puts. I had sold them, I think, for $1.35, I want to say, and I bought them back for about $1.75. I have to look at these numbers, but they're roughly about right. So I'm happy about that because Fitbit is getting absolutely slammed, and I actually hadn't been really playing the thing long, hoping to hold through earnings. I had been hoping to play actually for a bounce ahead of the number, and the fact that this thing could not lift an inch told me that it was probably going to go lower. That's just my feel. When you have a pattern that looks like it's going to break lower, something isn't necessarily... I love when things are selling off. Like, I would have loved to have seen Fitbit really dump ahead of the number. Then it probably would have got a relief rally. But the fact that it just couldn't lift and it was just meandering told me that there was a punch in the gut waiting to come, and that got it. Those stocks are often... I don't want to take too big of a victory lap on this because I think the point has been made, and I know a lot of people. I know a lot of people lost a lot of money on these stocks. I've been very bearish on GoPro, Fitbit, and the like. I refer to them as the silliness stocks, if you'll remember. And I had a lot of people who gave me a very hard time about it. They wanted to argue with me and fight with me, and I basically told them that the stocks were all going to go lower into the single digits, and GoPro achieved it, and now Fitbit is doing it, and I forget what the other silliness. At the time, it was, I think, Ambarella, and that had come down, and then I actually flipped and was more bullish on Ambarella near the lows, actually, based on a PE multiple basis. The stock eventually they actually do have a real business, and I don't want to say that GoPro and Fitbit don't have real businesses, but think about this. If Apple misses like on iPhones, the stock gets nailed. I mean, imagine their entire business was only iPhones. That's basically what these guys do. You know, they make a fitness tracker, and if they don't, you know, if they miss or they don't have the right margins, the stock gets nailed. And I've noticed that they've become really commoditized. If you go into a Best Buy or whatever, there are rows of these fitness trackers now, and I think Fitbits are probably one of the nicer ones, although there are some other ones. I know they're making them more stylish, and I think that they're pretty cool. I actually was planning on getting one, but I wound up getting the new Apple Watch instead. But if you look in the category, something that costs $130 or $140, you can buy for like $50 or $60 of the lesser brand, and it's probably not, maybe it's probably just as good as the Fitbit, frankly. So I think that they've become commoditized now in the single digits. And by the way, Fitbit, as much as it had come down, was still really expensive. I looked at that PE today before I made the decision, you know, the call, and it was still 24 times earnings. That's a pretty expensive multiple for a you know, a commodity type of business. So I think that if that could get into like a sub 15 multiple, I think it would probably get a little bit more interesting. So yeah, that wound up being the case with the Fitbit. Baba, like I said, I don't want to get too in. I'm just watching Facebook after hours, getting the wackaroo. You know, there was something that was an interesting tell for me in Facebook today. I often like to look at what the big money is doing. You know, I often talk about market on close orders, but there was a big options trade that hit the tape that was pointed out to me today. 127. This was in the 9 DTE. 127, 117. Someone bought like 10,000 of those. Of that spread. So it's basically 700, I think it's, the math was about $750,000 a point to the downside. So yeah, that was the story with Facebook. Their earnings were good, the quarter was good, but the way that stocks have been reacting, and I did my survey, it seemed to me that people were a little bit overly long Facebook, and that the stock hadn't gotten the shakeout before the breakout. I know it was down a little, and I know people were moaning and complaining that it was down a couple of points today, but it really wasn't enough. I had been talking about the stock being down into like, you know, the 100 MA or trend, and I think we're going to get that now after hours. I think we're actually even through it. So where I'm thinking now, the stock will probably find some support. That 117 level that I had cited was a 117.59 to 120.79 was sort of the breakout bracket. And if you do a Fibonacci retracement from the last swing low to the high, the 200 MA, the 61.8, and that 117 line up really well. So if we do come into that area, we're trading around 120 now. I'll probably be interested in selling some out-of-the-money puts. Maybe if I could get like 108s or 110s off with some near-dated expiration. That area to me would seem a little bit more attractive. With regard to BABA, this one I actually traded really, really well. I had talked about this getting close to 110, and I had a call spread on, and I had a sell order in for it when it would hit about 110. It got 109.87, but I guess the volatility was enough that it hit my target and got me out. And then I had taken out, then I was just short the puts, which I kind of rode down a little bit and bought them back. And I don't, you know, my experience with BABA has been fairly mixed. And knowing that, I didn't want to roll the dice again with BABA. I wanted to kind of bank the money. Because keep in mind where BABA came up from. I had done a lot of actual really major analysis on this stock, and I don't like to move my targets a lot. I know that analysts, Wall Street analysts and TV commentators love to move their targets, but I don't really play that way. Homie don't play that, going back to the In Living Color days. So I thought to myself that this stock had basically run up off the lows from like 59 and change all the way now up to the 110. There was a 1.618 Fibonacci extension up into the 103s. and then I had talked about measured moves into the 110. So that area to me was the pull the ripcord area. Yeah, it could have gotten to the 120, but it seemed to me, and it still might, but it seems to me that it would need to correct a little bit first. Now, I don't necessarily, they had a good quarter, so I don't know that they're going to fully fill that gap down to the 87 level, but I would say this. Let me pull up a Fibonacci retracement. I didn't put in the new one yet. Let me do that now. Off this low, this was 59 quarter. This was, never got the 110, right? I got 109.87. So, yeah, all right, so that's correct. I don't really use 38.2s for pullbacks. I use them for bounces. So here's the skinny with this. There is some important, we're through the 50 MA, and I've been consistent. I want to stay consistent that anything below 50 MA is get 100 MA tests. So it to me looks like that we could see 93s on BABA. That would be kind of around where the gap starts. The low of the gap was like 91.26. So that's where I'm thinking we could be into the mid-90s. I know 96s were a big level, 98s, but I think we could maybe go a bit lower because stocks that can't rally on good numbers tend to go a little bit lower. And I would be very interested if like this came down hard on market weakness. The breakout was 86.42 and the gap fill is 87.33. So as this comes down into that level, I'd be interested in selling out of the money puts. You have a 50% fib at 84.56. So as we come down into there and a rising 200 MA, I'd be into selling those out of those strikes out of the money puts. Microsoft also was really good on their number. I read that Putin now is not going to do business with them or something. That they're going to basically take the Microsoft operating system off computers. I don't know what that's going to mean for Microsoft, but I do think that this could pull back. It basically got over the dot-com bubble high. I had said that somewhere between 59.97 and the 1.618, which was 62.17, that area would be an area to book profits. Keep in mind, again, we came up from the bottom. This stock had run from $47. I mean, if this thing were just to pull back 50%, that's 54s. The gap fill and the 61.8 coincide around the 53s. So maybe, I don't know if we're going to, I mean, if we get a large market pullback, maybe we get that kind of that dramatic of a pullback. I'd be into buying the stock down there or selling the out of the money puts. I think that this could have a 50 MA test. That's right now around 57.93. It'll probably rise a bit into like the 58s. So I'm thinking that area will probably be a buy the initial time, at least for a day trade. For the pullback, or maybe same week out of the money put sales. This immediate gap fill from that level was 57.25. So I'm thinking that area, the 56.85 to 57 quarter, that area would be a good idea to maybe sell some same week out of the money puts if we get some kind of a flush into that level. So that's the Microsoft. We covered BABA. We covered Facebook. Where is Facebook now after hours? It's coming down, right? Yeah, it's down, getting into the target range. The one, it's roughly around that 120 level, which was really where the breakout goes to. Someone just messaged. I didn't see the last few messages, so if you guys want to resend them, I'll take a look. Yeah, somewhere between 117 and 120, I think there will be some support in the stock. The expected move was about $6, so I usually like to wait a little bit. I really wish this was on a Friday because I'd love to sell some same day out of the money puts on a Friday. That's by the way, one of my favorite earnings plays. If you get a gap down, like a big gap down in these momentum stocks, I like to initially on the flush you get a juiced up volatility, and there's often a bounce. So I usually like to sell some out of the money puts on a situation like that. But yeah, we're only going to be Thursday, so I have to see what the IV is like and where this opens. This could be a row trade, but my feeling is that there's people overly long still in Facebook, and that might take a couple of days to flush a little bit more. So let's see if it can hold that 117 to 120. If it can, I like it for like a right or right out long into that level. Google is kind of not looking very pretty. The 780 level is really key in Google. It's trading, and I use the L. We're trading almost right there, so that area could be, and you have 100 MA right there, so that could be a right or right out trade if it opened there on the open. 779.32, and like that 780 level was key. If this doesn't hold there, the stock could see the 765 gap fill and the 200 MA, which is around 759. So that's rising. It seems to me possible. The stock has moved a lot. I know that it tends to move like 90 bucks or so in 100-buck clips in corrections. So that would roughly take you there to that 200 MA if it continued into that measured move. But I'm thinking that this has moved a lot, that that area you might see a bounce first just because you came from like the range high all the way to the range low. So that area, that 780 area, is going to be really key tomorrow to see if it can hold. And if it were to open like right there, it might be worth like a right or right out trade for that area. Twitter. Twitter to me just seems like it's going to chop for a while. My problem with Twitter is that they need to kind of fix it. It seems to me like there's not going to be buyer. What amazes me is that M&A takes place when stocks are at highs. They don't buy the lows. So I think they're going to just kind of have to fix it. If you want to play it long, I like it long versus the 200 MA. So if it's above there, I think it's okay. Below there to me is a little bit iffy. I think they reported, right? They beat, their quarter was pretty good. It just seems to me that this stock is going to have to chop and kind of have to just work through the wilderness here. If I think this is going to be one of those stocks that you either believe is a zero or believe is eventually going to have some value in it. I know when companies look to buy, they look to buy growth, and Twitter just doesn't have it. Their management is just not executing very well. It bothers me that they still haven't gotten like the character count issue fixed. They talked about this like 2 or 3 earnings reports ago. I just don't understand what's taking them so long. Really kind of ridiculous. As far as Amazon goes, that stock had run really hard. I talked about that reaching some price level achievements. I don't have the fib extension on. I think it was 833, if I recall. 833 and change was the 1.618 Fibonacci extension, and I had said that between there and the measured move 885 was time to pull the ripcord. It was where we had gap below the 50 MA. It came down below now the 100 MA. Hold on, we just have to block somebody. Can we do that? I don't know how to do that here. I used to know how to do this, but it's getting a little bit more complicated. Anyway, it seems to me like this stock is going to come down a bit. In the past, it's had a 222 point or so correction that roughly coincides with the 200 MA currently and the breakout. I can't tell you that it's going to be a straight line down there, but I do think that the stock could continue to correct. There were a lot of people long Amazon. As far as the company goes and the quarter and all that, I think they were fine. I just think that these stocks really ran a lot, and it seems to me that the stock is just due for a pullback. That's it. Anything below the gap day low, you have a gap range. It was rather narrow. Anything below the 774.61 is still vulnerable. 100 MA. If you want to, I'll say this: if it's below the 100 MA, it's probably a short. If it's above the 100 MA, it's probably a long. So that's my take on it. I think the 100 MA is the key. That's Amazon. Apple roughly held. This is so crazy. I don't know why I can't. Oh, here we go. Finally, I got that. Finally blocked that guy. It wasn't working so well, but finally blocked. Anyway, Apple held the 111s roughly. I still think 105s could be in play, but if it can hold 111, the stock can go higher. If it goes below 111, it's probably going to go lower. So we'll keep it that simple. 111 is the kind of the play. I actually have on a play for Apple going lower. I have the 105, 102 put ratio on, 1/2. I think it's in the November expiry. I did it small because it's longer and we could get a nasty pullback. I think the break even around there is like 98. So I'm actually not, I'd actually like to buy Apple around that level, so I'm not really so worried about if it slammed down into that area and maybe I would take it off in pieces, like I would take off the 108, 105s and keep the 102s short. So I think Apple could, it's basically 111 or higher or lower. I mean, that's it. If it can hold 111, the stock goes higher. If it loses the 111, the stock will likely go lower. The Skechers SKX, someone asked about that. That's actually one that I'm playing a little bit. It seems to me that it can rally a bit. It got close to my target though. 21.47. So sorry, my target was 21.56. So it's backing off a little bit there. I do think that this could eventually fill the gap, but I think the bounce play might be a little bit iffy if it can't get back up into that level. So you really need to hold into those levels. But that's my targets into Skechers. That whole industry has been under pressure. Like Under Armour has been getting the wackaroo. I've been looking for Under Armour to get the channel low and the 61.8, which is 27.97. It bounced a little bit prematurely around here in the 30s. But if we can achieve the channel low, like if we have channel low and that area, I'll be looking to sell some out of the money puts for a bounce play. I don't know that this can get all the way down to like 20, but I would be interested like 2070-ish, actually buying shares there. But in the interim, I think it's getting a little bit ahead of itself as far as the selling goes, and it might be due for a bit of a bounce, but I would prefer it down into the 61.8 so I at least have some technical levels to reference there. Same kind of thing with Nike. This thing has been getting slammed. The channel low is roughly in the 47s, which coincides with the flash crash low, 47.25. So if we can get to that area, I'd be near dated looking to sell like maybe like 45 puts. The 50% fib is 44.74. The 61.8 is really far down, really closer to trend around 39, but I like to think in stages. It could happen that we get that big of a move down, but I'm thinking that the channel low is a good area, at least short term, with that reference low to sell some out of the money puts. So I'd be looking to sell maybe somewhere around those 45s or lower strikes. I have to take a look at that setup when we get there. Someone asked me about UNG, not one I follow very often, but I got an alert today when it hit the 200 MA, and I was sort of looking to see if it would hold and stabilize, and it actually didn't. It closed below the 200 MA, and it closed below the trend. Let me try and zoom in here. These charts are driving me nuts. They did some kind of an update on this charting system in the last couple of weeks, and it just is really bothering me. If this holds below the 200 MA, this thing could be sniffing the like 636. That was like the last referenced low to fill up the triangle. I don't know if it's going to get all the way back down to like 578, but if we drew a fib on it from 578 all the way up to the high, we would be coming into the 61.8 soon, around 733. Oh no, that's not right. Sorry, hold on, scratch that. 578. My number here didn't. This wasn't correct. It would be. Hold on, was that the right high? 7.25. That was also kind of the breakout area, so it's below trend, but I might be willing to like take a stab at it for a right or right out trade into that area, around 7.25, just because this has come down so far so fast. But I do think that this could be looking to get into the sixes, maybe the 661, which is the 78.6, or the 736 reference low to really fill up the triangle from that snap. So careful. It's a lot fast. I do think it's due for a bit of a bounce, but anything below this 200 MA to me is a little bit iffy. If tomorrow we were able to get back up above the high of today's high of day, the 771, that would be to me a look below and fail, and I would think that that would be a good right or right out trade also. So I'm either looking to do a row down at 7.25 or back up above the high of 771 if it like were to go tomorrow. I would take today as a look below and fail. Gold has been rallying. I prefer silver. It seems to me that gold basically got close to did basically fill the gap. I'm a little cautious here now with the dollar softening a bit. I had talked about the DX. It's actually pulling back really nicely here to the breakout area. So this is going to be key here with the dollar. I had said that I thought that in the last couple of videos that I thought the dollar would go higher, that it would probably start peaking sometime between where it did and 99.79, where I still think it could go, based on a measured move basis. So today's range in the dollar, I always like to use Fed day ranges, and we're going to get to that in a minute with SPY and such. But today's range is key. If we could break the low, I think we could retest the 50 MA, which is down in the 96s, which would be good for the precious metals. If we get back up above the high of day today, though, it's going to be time to scoot. And I think that gold kind of had a bit of its move. Same thing with silver, although silver has a little bit more relative strength in there. It's holding the 50 MA, so I guess you could use 50 MA, long above the 50 and short below the 50. We're losing daylight here, and it's going to get dark, so we're going to have to wrap this sucker soon. Someone asked about Visa. Pulling back, this to me looks like it just had poor highs, and it wants to do a pullback, a correction. So the last Visa move was from 81.71 down to 73.25. So it could probably project that type of a move. To my eye, that looks like maybe a 200 MA. We have 100 MA coming in roughly around 80.14. That's going to be the key. If you can hold there, it's kind of okay. If it loses there, I think we see the 200 MA. I think a lot of these stocks want to see that 200 MA. Like if you look at SPY, for example, where we got the gap fill, today's range is going to be key. Today was kind of just a pause, but kind of more bearish. The 200 MA is a little bit below us, so I think that there could be a little bit more room down in SPY, but I don't think it's going to be as dramatic as people might be hoping for. I think the tail risk is around 205s. That, by the way, 205.25 was the Yellen breakout. Like I said, the come to Jesus moment, which was on 4/12. We have a 50% fib we're at right now at 209.13. You have a 61.8 it's 206.65. You have the 200 MA right below at 208.09. So I think there might be a little bit more down, but I think that somewhere between the 200 MA and that 61.8 is probably going to catch it for now. So I'm thinking maybe a little lower, but maybe not dramatically lower. And that might be why things like Apple are catching a little bit of legs, because of the those kind of names tend to maybe bottom first because they're the quality names. I put on some light, but wow, does that make me look yellow? Anyway, so that's what I'm thinking with regard to SPY, that we might be seeing a smidge lower, but I think it's going to catch itself soon. There are some channel lows. That 61.8 area, I realize, granted, it's like 30 handles or so lower, but in the scheme of things, that's not ginormous. That roughly would be doubling the range. Remember that I talked about doubling the range, which would take us down to that 205 level. We've basically achieved that area. So anywhere into those zones, I like the idea of starting to book some profits and maybe start to sell some very near dated, maybe same week expiration out of the money puts. So that's my skinny on SPY. IWM also getting really close to some price achievements that we discussed. When I say we, I mean me. 61.8 is real close here at 14.95. The 200 MA is below us at 14.25. So I think that area is going to be key. If we were to lose that in dramatic fashion, there's a gap fill down to 110. But I like to think in stages. We had the trend snap, which I talked about. We lost the 120.58. We lost the 117.37. And I said that I thought we were going to rotate down to the bottom of that box that I drew in. The low of that box is 114.29. The 200 MA is 114.25. That area is probably going to hold at least the first time going. So I think that, like I said, there could be a smidge more down here. But this is the area to probably look to start booking profits and maybe even flipping to try to do the right or right out longs versus that boxed area. Yeah, so that's what I'm thinking. IWM is probably got maybe a little bit more in the tank to the down, maybe a little bit more, but I think that it's probably like if there were to be a gap down right to the 200, love it for a right or right out play. The Qs today just broke the old reference high of the 115.75 and are right on the 100 MA. The problem is that Facebook is down after hours. Apple is kind of holding, it's down a little bit. Google is, I think, down a little bit too. Yeah, Google is down. They have such a big bid-ass spread there into like that pocket. So we could have a gap down tomorrow. I'm curious to see if it's going to be a gap and go or a gap and buy. If it were to kind of come down, the last other kind of reference supports are with the last swing low, which is 113.63, and then trend, which coincides with the breakout around the 111s. There's a 50% fib at 110s, and then the 61.8 is 108. The 200 MA is roughly around the 110s. So I think we might be coming down to those 110s, 111s by the time the 200 will catch up to that area. So I think that area could be in play for a bounce. It's also a very large volume distribution where there's some reference areas. So I'd love to be coinciding maybe some right or right out longs in some of these momentum stocks as the Qs come into those like 110s, 111s. So that's my view on the market and where we go. By the way, if the Qs were somehow to miraculously now get back up above the 115.75, today would be a look below and fail. But it doesn't seem like that's going to be the case with what's going on with like Facebook, for example, after hours, which is coming into that 118, 117 area. Someone's asking me, what are the affordable alternatives to the liquidations? The Qs, the QQQ. If you don't want to do Google and you don't want to do Amazon, then you would do it in the QQQ. That's I guess the way to do it. I often, by the way, like to play. If you want to kind of like, if you're talking football betting terms, you can outright bet the team, which is bet like Amazon or Google, and then take the money line the other way and kind of short these Qs, or vice versa. So that's sort of how I like to play it. Anyway, that's my story. I'm sticking to it. Those are my levels that I'm looking at. So I'm thinking a bit lower, but I'm thinking that we might get a bounce soon into some of those reference areas, just because we've been coming so far so fast. Alrighty, so that's it. I will go into this in more depth in my weekend review video, which will be out on Sunday. Thank you for everybody for taking their time to watch me. I hope you found my videos useful. And I know it's been a rough slog the last couple of months, really, with a really choppy market. But we're getting some good trading opportunities now, and I think that I think that there's going to be a setup, like I said, into the election that I'm going to discuss a little bit more in the Sunday video. Anyhow, that's my story. I'm sticking to it, and cheers. Oh, if you missed this video and you want to catch it or caught part of it and want to or rewatch it, it's going to be on my YouTube channel soon. That's Justin Pulitzer Trades. And if you're not following me on Twitter, the handle is actually @JustinPulitzer. Cheers.